Darby Berhad, a Malaysian conglomerate established in 1910, originated from European and Chinese entrepreneurs in British Malaya. Initial focus on rubber, it diversified into plantation, property, industrial, motors, energy and utilities sectors. A major player in sectors, it promotes sustainability and corporate responsibility. Operating globally, the company's adaptability, strategic investment, and commitment to excellence define its continued success and significance in Malaysia's corporate landscape. FGB Holding Berhad, formerly Feda Global Ventures Holdings, is a Malaysian agribusiness giant established in 2007 through the restructuring of Feda. Focused on palm oil, it operates a comprehensive supply chain and addresses sustainability concerns. The company, a key player in the global palm oil industry, has faced challenges related to labor practices and environmental issues but actively works on sustainability, diversifying its portfolio into rubber, sugar, logistics and refining. FGB aims for resilience amid commodity fluctuations.
Okay, next is a ratio analysis. First of all, in liquidity ratio, both companies shows a fluctuating trends in 2020 to 2022 for current ratio and also quick ratio. Thus, Darby managed to be better in current ratio compared to FGB Holding. This indicates that Darby had a better skills to meet their short-term obligations. On the other hand, FGB Holding has a better average collections period than Darby Berhad. A shorter ACP is generally preferable and means that the company has higher liquidity. Next, for the activity ratio, as we can see, FGB Holding Berhad is a better in average account receivable compared to Darby. It means that FGB Holding is good at collecting from customer. Then, Darby maintains stable in fixed asset turnover and has a fluctuated trends in total asset turnover, while FGB Holding showing a more substantial increase in both ratio. Overall, FGB Holding is more better in generate revenue. After that, in profitability ratio, FGB Holding shows a good performance in all three ratios. Although they are fluctuated in the net profit margin trends in the beginnings, but this company has a higher percentage compared to Darby. It indicates that FGB Holding is more favorable in converting revenue into profit compared to Darby. The last one is a leverage ratio. Although FGB Holding managed to reduce the percentage of the three leverage ratio, but the total ratio is still high compared to Darby, which managed to stabilize and has lower percentage in all leverage ratio. The firm that operates with high operating leverage can be risky investment, while lower leverage will help keep low transaction costs and more profitable.
Next is common size analysis. Darby Berhad balance sheets from 2020 to 2022 show a decline in non-current assets and increase in current assets, and a decrease in total equity, indicating potential financial challenges. Notably, there's a reduction in non-current liabilities, but a significant rise in current liabilities, especially in derivatives liabilities. For FGB Holdings, Berhad experienced an expected decline in non-current assets, driven by a substantial reduction in deferred tax assets. Current assets increased significantly, mainly due to a surge in inventories. FGB saw a decline in non-current liabilities payables, replaced by a notable rise in payables within current liabilities. This shift may suggest effective management of long-term obligations, but a rise in short-term obligations possible linked to increased business activity. In the income statements of common size for Darby Berhad from 2020 to 2022, revenue fluctuated, operating profit remained stable, and profit before tax showed a small increase in 2021 but decline in 2022. To strengthen financial position, Darby should focus on reducing product costs, improving inventory processes, and increasing average order value. For FGB Holdings Berhad during the same period, revenue and operating profit increased significantly, reflecting excellent cost management and profit expansion. Profit before tax showed substantial growth from 2020 to 2021, with a small drop in 2022. Both companies, Darby Berhad and FGB Holdings Berhad, appear to be in excellent financial condition, positioning them well for long-term growth from 2020 to 2022.
Next, I will explain about year-to-year change of balance sheets for the Darby Berhad. In 2021 shows that the company experienced a modest 0.86% growth in total asset, but faced a severe 100% decline in 2022, indicate that this company is significant challenge of financial difficulties. Overall, there were a slight 0.86% increase in total liabilities and equities in 2021, but a 100% decline in 2022 raises concerns about the company's financial structure and ability to meet obligations. Next, this company shows that the total assets decreased slightly from 6.89% to 6.12% for the year 2022 until 2021, suggesting a conservative approach of the company. However, it was declined with negative 99.61% in 2022, indicate that a several financial issues. Therefore, such a drastic reduction may affect this company, indicate a default on obligation or a significance of the company ability to meet its financial obligations. Next, Darby Berhad company. It shows that this company in 2022 faced some challenge as there was a slight decrease in both revenue for sales by 2.15% and operating profit by negative 1.88%. However, this company declined in operating expenses by 2.19%, suggested that this company need to manage its costs effectively. There was a decline in sales by negative 4.45%, suggested that a contraction in the demand for the company's offering in 2022. This downturn in 2022 may have been influenced by challenging economic conditions or internal factors that affected Darby Berhad overall financial performance. Next, for FGV Holding Berhad demonstrate impressive revenue growth, increasing by 6.60% in 2022, followed by 2021, which is 39%, continue positive trend with 30.64% for 2022. It shows that the company effectively managed its cost structure, moderating the increase to 32.53% in 2022. This company ability to adapt the challenge in order to maintain a sustainable cost structure. Next, for index number analysis of balance sheet for Darby Berhad, total assets grew consistently by 10.84% from 2020 until 2022, indicate that this company has successful business expansions. FGV Holdings Berhad has experienced consistent growth in total asset, rising from 100% until 105.42%, indicate that this company have good financial performance. Darby Berhad shows that this company has strong revenue growth over the last 3 years, increasing by 20.44% and 15.8% from 2020 until 2022. However, FGV Holdings Berhad also exhibited impressive financial growth from 2020 until 2022, with a rising in revenue 39% and 31.60% efficient cost management.
In conclusion, although Darby Berhad has demonstrated good performance in managing debts and meets its short-term obligations, however, they must improve efficiency, emphasizing the need for Darby to optimize its processes, potentially increasing sales and cash generations. In addition, investors may consider that Darby is poised to provide higher future returns because of its efficiency in managing corporate debts effectively. On the other hand, FGV Holding Berhad should enhance its performance through more strategy and consistently effective management, particularly in the domain of debt management, to ensure improved future incomes. FGV Holding is a company that can attract more investors because of its strong performance in efficiency and sales generations. This comprehensive financial metrics suggest that FGV Holding exhibits a stronger overall financial performance than Darby Berhad.